Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look at the euro currency again. So on Friday we have discussed this support area and 768 support and said that market really could show some minor bounce out from it because some intraday patterns have been formed that also have the targets around this area, and that has happened. So you can see here is again market has formed some minor retracement, but currently, guys, on the euro currency the major analysis stands mostly on the weekly chart, because recent week this weekly action looks like the high wave pattern, and high wave by itself is not the directional pattern. It mostly indicates the indecision and some pause in the downward action. What is more important with the high wave is their top and bottom, because depending on what level market will break through, either through the top or through the bottom, it will put the foundation for the further development and will determine the direction of the further action. So from that perspective, this low will be very significant, because if market will pass through it, this will lead to further downward continuation. And since right now market has no significant support till the 135 area, only around 135, 134.75 stands very significant support area, and since market has no support till this area, that probably will lead to significant action to the downside. Besides, as you know, rumors right now on the market that the European Central Bank on the meeting on the next week will could start another easy of the policy, so that will also press on the euro in the short-term perspective. Still, currently on the euro currency we do not see the clear picture, because from the one point of view, yes, market probably should continue move lower, but where it will should start this action? From here, or market will return right back up a bit on the neckline, will retest it, or market will show the deep retracement and will show some sort of the bread and butter sell or something. We do not know this from this chart. We know that trend is bearish, we know that market has lack of support area, support levels below it, but where it will start this action, it's very difficult to say. That's why here is some glossy riddle presence on the euro currency, and here we will apply the well-known method of analysis when you look at the fellow currencies that will let you to resolve this riddle. And particularly speaking, we will take a look at the Swiss franc. And Swiss franc daily chart has very important pattern that has been formed there that could clearly totally clarify the situation on the euro currency. So take a look at the Swiss franc on the daily chart. You can see that Swiss franc has absolutely the same pattern as the euro currency does. Here is the double bottom, on the euro currency this is double top. But take a look what market has formed on Friday. That is the bullish stop grabber. It means that market should not show any significant retracement here. Otherwise market will move below the neckline significantly and will erase this pattern. By itself, this pattern suggests the taking out of these highs. From the perspective of the euro currency, it means that this pattern suggests the taking out of these lows, and if this will happen, market will pass through the bottom of the weekly high wave pattern, and as we have just discussed, this will lead to further downward continuation. Here's the solution for this riddle. Speaking about the Jod-Napoli framework, well guys, I do not see any problems with it, because this thrust still is valid and is still suitable for Jordan directional pattern, either bread and butter or double repo, but usually these patterns forms on some more or less significant support areas. Maybe logically this could happen, for example, from the 135 area. This is the just one level that is strong enough to trigger, for example, bread and butter or something of that sort. Because till this area, till 34.75, 35 area, we do not have any significant supports. That's why, in fact, they could appear as the bread and butter, as double repo. They could appear, but the chances of the appearing is not very significant right now. So we will see what will happen. For that purpose, I suspect that market needs to need to pass through this resistance from the neckline and taken out of these highs to form something that looks like the bread and butter sell. But currently it doesn't look so that market right now ready for this upward breakout, based on the patterns that have been formed, based on the behavior that we see on the intraday charts. So if you take a look at the 4-hour time frame chart, here we see that market is moving inside of the parallel channel to the downside. Market has completed this butterfly. Market has completed this A, B, C top pattern that we have discussed in our research on Friday. So we said that some retracement up could happen, and that really has happened. That's, by the way, on the Great British Pound was the reason for Kibi trade that really was completed, and it was not bad at all. So looks like the Jordan other patterns also works. Now what we see here are we have some significant issues here. First of all, recall that we have discussed the possible free drive buy here. If it will work properly, it should take out of these highs. And here is some very interesting moments. So take a look that these highs stands slightly lower than the neckline of the double top pattern on the daily, then the weekly pivot resistance one of the common week, and that is also 618 Fib resistance. So in fact, market could slightly take out these highs, so to show some sort of the wash and rinse of these highs, without breaking the bearish sentiment. Even retracement to this area, retesting of the neckline, will not lead to failure of a high wave pattern, will not lead to failure of the double top, and simultaneously market could complete this free drive pattern. This is very important moment. Another scenario that we could get here is that market could continue moving this channel and turn down here. That's also looks logical because this is the upper border. This is the 1618 extension of that A, B, C bottom pattern. That almost coincides with the 50% resistance of this thrust, of the whole butterfly thrust. So you know that your currency likes to show the 50% resistance levels. Well, that's also will be significant resistance, and who knows, maybe market will reach this area, turn to the downside, and will give us also at least triples to sell. So this will initial thrust, ABC retracement, downward continuation. That's also possible. It means that this area is an area where we'll be watching for possible reversal to the downside. It's an area between 136.55, 136, approximately 75 area. That will be an area that probably will be treated as the potential area where we start to search for taking the short position. And finally, the third moment here, take a look where the weekly pivot support point stands. It stands right at the lows of the high wave, weekly high wave pattern. It means that if market will take out of these lows, we will get the more confidence from about the possible bearish continuation, not only from the perspective of high wave pattern, but also from the perspective of the pivot points. Because if market passes through the weekly pivot support one, it means that bearish trend is still valid, and this is not just a retracement, because that is some sort of the edge between the retracement and the trend. Moving below it will mean that market has the bear trend. It just will confirm us and give us more confidence with the possible downward continuation. So that's the situation on the EUR currency. That's been said, in true words, our trading plan is as follows. First, wait for some small continuation to an area between 136.55, 136.75. Currently, I just don't know how market will behave here and what patterns will be formed inside of this area, but that's scenario to watch for. If it will be all will be okay here and market will show graduation in this area, search possibility to take into short position, because market really could continue move down right from this area.